As a prudent investor, you should not only look at the US financial media, but also looking around the globe what's happening in the global monetary system. Because today, the financial system is very much knitted like this. It's very closely intertwined, especially when it comes to the global banking system. Okay, so if something happens elsewhere, it may have a ripple effect across the globe, especially when it comes to seeing the financial system being so fragile that the yuan carry trade can also cause havoc across the financial markets. So let's talk about China here, because China is right now going through a major economic crisis. We have already seen in the last 2 years that the real estate has been crashing hard. Their real estate developer firms are actually being bankrupted. They are missing their debt payments towards the lenders. So while we're seeing the real estate market is crashing hard in China, which is going to make a big hole in the banking system over there, who have financed those real estate projects. And a lot of financial systems who have actually engaged in the real estate market in China, they are literally going through a very tough time in terms of managing their balance sheet. Because if you look at the Chinese growth in the last 20 years, that has been grown through the real estate market in China. Okay, so China has been the manufacturing engine for the global production, right? So everything that we buy from Home Depot, from Walmart, from Target, 90% of those stuff is actually built, manufactured in China. Okay, so China has been the manufacturing hub for the entire world. Okay, but the wealth that is being generated through the manufacturing economy, that was flowing into the real estate market locally in China as well as globally as well, like in Canada, in Europe, in US as well. And also that money was flowing into the equity markets and bond markets as well, because Chinese investors were actually moving their capital out of China and also investing and diversifying into other areas as well. But looking at what's happening in China when it comes to their real estate market crash, and then the outright deflation, right now they're actually going into a deflationary scenario. The chief governor of this central bank has put out a statement that they are really worried about the deflation impact in China, because deflation could be bad or good. Okay, if it is coming out of the increased productivity, when we produce more stuff, then of course the price of that stuff becomes lower because it gets cheaper. We're adding more supply into the economy. That's a good deflation. But in a debt-based monetary system, when we see a deflation, when the price of goods and services literally collapsing, that's not a good sign in a debt-based economy, because the economy has to run based upon the new debt being issued. But if there's outright deflation, that means less debt will be issued in the economy, which means there will be no growth in the economy, right? So what we're seeing right now in China is outright deflationary pressures. Their central bank is kind of stuck in a rock and hard place, because if they start cutting rates, it's going to put pressure on Chinese currency. It's going to damage the bank's profits as well. Of course, China is a state-owned enterprise, right? It's not like a Western economy that can somehow work freely, even though the Western economy is not free market anyway. But compared to China, it is. But the Chinese economy is fully state-owned enterprise. So their central bank is trying to protect the bank's profit, and also they have to stabilize the currency as well. So that's why they're not cutting rates aggressively, even though their economy is literally going into the deflationary bust. Now, why I'm telling you this? I'm telling you this because China is one of the major player in the global monetary system. It's a major player in the global financial system. If China is struggling economy, if China is going through deflationary bust, okay, that means it's going to have downward wage pressures. It's going to have mortgage shrink, debt contraction in the economy, which means GDP is going to contract. That is going to have a massive repercussion in China when it comes to quality of life, but also it is going to be exported out of China and impact European and North American markets as well, because Chinese have been one of the major buyer of US treasuries. Okay, I think they are the big, after Japan, they are the second second most holder of the US treasuries. So if they are going through deflationary bust, okay, if they have to pay off their debt and they don't have enough liquidity, what they're going to do, they're going to sell what they have. Okay, they have the second highest treasury holdings. They have invested into US equity markets. They have invested into US and Canadian real estate market. Canadian real estate market has been enjoying the Chinese capital for the last 20 years. So if China is going through all these economic crises, that means that deflation that we're seeing in China, it's going to be exported out in our countries as well. US, Australia, Canada, Europe as well. So we should be looking at as a hawk, because China's problem is not going to be isolated. And don't forget the banks. The banks are intertwined like this. If Chinese banks are going to have a big hole in their balance sheet because of those non-performing loans invested into real estate market, they have to write off those massive loans. Okay, and when those banks are going to write off those massive loans, they will have impact on the other banks in the global monetary system as well, because every bank has assets and liabilities. So Bank A will have assets, but it could be a liability on Bank B balance sheet. Bank B will have that as a liability, could have an asset on Bank C's balance sheet. So the banking system is very intertwined. They have interdependencies on each other's balance sheet. If one bank collapses, it may have a ripple effect across the global monetary system and the banking system. So we could see a major banking crisis coming out of China because of the real estate market crash, as well as in outright deflation, because again, it's a debt-based economy. If debt is not being repaid, or if debt is not being reissued, that's a major problem for any economy that runs on debt. Pretty much today, the Western economies, including China, is running on debt. Okay, so yeah, this is going to be another headwind towards us when it comes to navigating through these financial situations in the market. So we should be paying attention to China as well, and Japan as well. Like, all of these countries are big player in the global monetary system. If you're a prudent investor, you should be keeping your eye across the whole system, understanding what's happening in the global monetary system, and adjust your portfolio accordingly. Personally, I would be very careful investing into the markets, as a new money, right? Whatever I have invested, I will try to see if I can somehow, liquidate them. If not, because I have less confidence in the market right now by looking at all these macro fundamentals. This is giving me a very less confidence in terms of keeping my money in the market. Anyway, you let me know what you think about that. Put your comments down below. Let me know, what are you thinking about all of these macro challenges? How are you protecting your wealth, your investment portfolio? Let me know, and I'll see you in my next video. Take care. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later.